Hello everyone, welcome back to Upside Down Data. Today I want to talk about a new risk indicator we just launched for Hedera Hashgraph and its native token HBAR. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter where we put out regular updates about our risk indicators and more. So if you're returning to the channel, you're probably familiar with these types of graphs, but in brief what I'm showing you here is the price of HBAR in US dollars over time. So each dot you see here is a day, and the color of the dot corresponds to the output of our risk indicator, which is called the Upside Downside Potential Indicator, or UDPI. And the way that you can read this output is that a score of 5 means high risk. That's when the downside potential is far outweighing the upside potential for the asset at that point in time. And a score of -5 is low risk. That's when the upside potential is far outweighing the downside potential of the asset in that point in time. And what you can see is that over the course of HBAR's lifespan, the UDPI has been pretty spectacular at pointing out these low-risk zones where historically it was advantageous to be acquiring HBAR, as well as these high-risk zones when the upside potential was getting tapped out, and then it preceded these corrections that we ended up seeing. So essentially, if one had been following the UDPI and then had just been investing just purely based on what the UDPI was telling them, one would have done quite well with HBAR. You know, down here, for example, one would have been acquiring at around 3 cents and then selling all the way up here at around 45, 46 cents. So as you can imagine, that's quite the profit. That's about a 15x profit on one's money if one had gone ahead and done that. Acquired, 3 to 4 cents, selling off at around 45 cents. That would have been quite a good return. And then, of course, the UDPI also identified the summer as being a pretty fantastic time to be acquiring HBAR as well. And then, sure enough, had one done that, it had a low of about 15 cents in this region. It went up to almost 60 cents then. So, probably would have returned somewhere between a 3 to 4x return, depending on at what price one was buying down here, and then selling up here closer to the top when it was flashing red again. And then, of course, we've had a bit of a correction off of that move since then. And currently, we're kind of sitting in the mid to upper 30s right now. And you can see the model is actually now starting to flip a little bit more bullish on HBAR and suggesting that the upside potential might be increasing and the downside potential might be, the upside potential might be greater than the downside potential potentially at this point in time. And one way that we can see that a little bit better is if instead of graphing it on price and just color coding to the model, to actually just look at the raw output of the model across time. So what I'm showing you now is I'm replacing the y-axis with the UDPI level, so -5 low risk, 5 high risk, and the color coding is just corresponding to those levels. And what you can see is that, as we saw with the previous graph, the indicator tends to get into these low levels when it's been a historically good time to be acquiring HBAR, when the upside potential is much greater than the downside, and then it spikes up into these red zones, these high risk dangerous zones, when it seems like HBAR is getting a little bit overheated, overextended. And so where we currently are, if we look over here, kind of coming off that correction we were just talking about, we've crossed back below the 0 point, and so that would suggest that the model thinks that HBAR now has more upside potential than downside. It has more room to move to the upside than to the downside at this point, which might suggest that it's looking a bit more like a favorable investment than it was just a month or so ago in September. So not financial advice to make your own decisions, but that's what the model is suggesting at this point in time. Now it's important to note that just because the upside potential seems to be greater than the downside potential right now does not mean that HBAR has to go on another run immediately again. It doesn't have to go spiking up to those high levels or break its all-time high or anything like that. It's very possible that HBAR will need more time to kind of consolidate. It might even move a little bit more to the downside before it's ready to do that. But the idea here is that any moves to the downside that will happen are probably going to be less extreme than the moves to the upside that could happen. There's less room for it to move down than there is for it to move up right now, according to the model. And so it's a favorable risk-reward proposition is the idea at this current point in time. Now, I think a great example of how this model can kind of chew you into what HBAR is doing and how to kind of cut out the noise and the fear that sometimes gets injected into the market or into the crypto space. If you remember in the summer, if you're around in the crypto market for the summer, if you're around HBAR in the summer, people were extremely bearish at this point. We just had this big rally up to a top. We came and corrected all the way back down. People thought, the whole crypto market was correcting, had crashed. And people thought we were just going to keep on going down. I remember seeing people on Twitter talking about HBAR going down to 10 cents, down to 3 cents. Some thought it would go all the way back down there. And so there was a lot of fear, and a lot of people were saying, like, oh, you'd be crazy to be acquiring HBAR now. Like, only an idiot would do that, like, it's just going to keep crashing. But if you've been following the UDPI, you would have been able to know, like, well, no, that's just not true. The data actually suggests that we're very unlikely to keep correcting, and actually, in this point, it'd be kind of foolish not to be considering acquiring HBAR. It'd be foolish to be thinking it's going to go down to 3 cents. And then, sure enough, we had that 3 to 4x rally off of this low point, all the way up to here in September. And so what the UDPI lets you do is kind of cut through all that noise, cut through all those people who are kind of spewing fear without any real basis for it, just kind of throwing out hot takes about what they think is going to happen in the market. And it lets you make data-driven decisions. What does the data actually suggest? Is it, in terms of the data, a good time to be acquiring an asset, or according to the data, is it a good time to be potentially distributing the asset, selling the asset? So of course, none of this is financial advice, but that's one of the things I really find useful about this indicator, is that it lets you cut through the noise and really inform your decisions more on the data rather than just hot takes on Twitter. So to talk a little bit more about where HBAR is right now, currently we're sitting at negative 0.66. So again, the indicator ranges from negative 5 to 5. So we're at a point where the upside potential is a little bit outweighing the downside potential. So it's a little bit in your favor right now, the risk-reward proposition for HBAR, but not extremely so. It's not down in these super low-risk zones that we've seen before. Well, one of the things that's really useful about the UDPI is not to just have it for one asset like HBAR, but actually have UDPIs for other assets as well. And so if you've been following the channel, we have made UDPI indicators for a bunch of different crypto assets. So we have one, for example, for Ethereum. We have one for ADA, Cardano. We have another one for Atom, Cosmos. So again, I'm bringing these up because there are other layer 1 protocols. So HBAR is what's known as a layer 1. It's kind of the base layer protocol where people can then build decentralized applications and things like that on top of that protocol. And so Ethereum is, of course, the biggest and most popular layer 1 protocol. But then ADA, Cardano is also quite popular, as is Atom. And it's useful to have these different indicators, because what you can do is you can say, okay, I know what the UDPI says for HBAR right now, but what about these other assets? If I'm completely agnostic to these projects, if I don't have a strong thesis of which one is better than the other, and I'm just purely trying to look at the risk-reward ratio, then you can just very quickly look across these and see, okay, HBAR seems to be in a better place right now than Ethereum or Atom, but it's maybe not quite as good of a risk-reward proposition as ADA Cardano, which actually seems to have a reasonable amount of upside potential, and its upside potential seems to be outweighing its downside potential to a reasonable extent. Now again, none of this I'm not trying to say that any of these protocols is better than the other with any of this information. That's not what this information is telling you. All it's telling you is that based on the asset's history and kind of everything that the UDPI has learned about the asset, just what it thinks is the upside versus downside potential in the given moment, and which ones are offering maybe a more favorable risk-reward proposition than others. So again, I leave it up to you to decide which of these protocols you have more faith in or you think is fundamentally stronger. This is not trying to communicate that information. This is more purely just about what the model knows about these assets and its estimation of what the upside versus downside potentials are right now based on how the assets have been behaving. And that's one of the things I think is useful about these indicators, is that if you're just looking at where the risk-reward ratio is most favorable, they give you that information very easily, very cleanly, and it can help you make those decisions. And then if an asset is really overheating, so let's say, for example, HBAR went on a crazy run, was up in these 5 bands, but then ADA was still sitting down here at negative 1.36, that might suggest that you could take profits from HBAR, selling up here, maybe move them into ADA Cardano, which is a more favorable risk reward, and then maybe ADA Cardano will run after that, and you can compound those profits across those 2 different assets. And so again, not financial advice, but that's just one way you can use these different indicators, where you can take profits off of one that's recently run and overheated, and then take those profits and put them into an asset that hasn't run yet, hasn't overheated, and then potentially compound those profits if that other asset has its run subsequently. So another thing that we can do with these UDPIs is, instead of always looking at the risk against the US dollar, we can actually look at the risk against other crypto assets. So what I'm showing you right here is actually the valuation of HBAR in terms of Ethereum. So this is the valuation here is basically how many Ethereum is one HBAR worth. And so of course, HBAR trading right now at, in the cents range, it's never broken $1. It's of course going to be a fraction of an Ethereum, which is, in the thousands of dollars. But what we can do is we can just look across time, how many HBARs is, how many Ethereum is one HBAR worth. We can look to see if HBAR is a little bit overextended against Ethereum, where maybe HBAR was really outperforming Ethereum in a certain period of time. The UDPI can then realize or recognize when that might be likely to stop. When HBAR has been running too far against Ethereum, and maybe now it's Ethereum's turn to run, or maybe HBAR will start bleeding against Ethereum. And so really what this chart is looking at here is just that it's looking at relative performance. So higher values here mean that HBAR was performing better against Ethereum, and then lower values mean that Ethereum was performing better than HBAR. And so what you can see is that over time, the UDPI has been pretty great at calling out when HBAR has maybe run a little bit too far against Ethereum, kind of outperformed Ethereum a little bit too much, and it's unlikely to be able to sustain that. And then sure enough, we get this pullback where now Ethereum's outperforming HBAR, and then HBAR runs again against Ethereum, it's outperforming it, until it reaches this kind of high risk zone, in which case we see these corrections. And so currently where we sit right now, it is the UDPI is flipping into the green zone, where it suggests that HBAR might have more room to move against Ethereum than Ethereum does against HBAR, is the way that you would interpret that information. So it's also useful to just look at the raw output of the UDPI for the HBAR Ethereum valuation, just to see this a little more cleanly. But again, what you can see is that for those zones where HBAR has been kind of sitting low against Ethereum, it tends to be able to identify the moments where it's pretty low risk, and that tends to precede these big runs that we end up seeing against Ethereum. And then we get these cool-off zones, we get these corrections where then the UDPI comes down to these lower risk zones. Then we have another run against Ethereum, where at these points you might want to be trading your HBAR for Ethereum, because then Ethereum is probably going to outperform HBAR while HBAR bleeds against Ethereum. Then you might want to trade your Ethereum for HBAR, for example, and keep going. Or another way you can use this information is if you're considering, should I be buying HBAR right now or should I be buying Ethereum? If the HBAR Ethereum risk level is low, that might suggest you want to be buying HBAR. If the HBAR Ethereum risk level is high, that might suggest that you want to be buying Ethereum, is another way of thinking about this. So it's all relative performance. That's what this information is telling you. And so as I mentioned, right now where we stand is it seems like the UDPI is thinking that HBAR is more likely to be able to run further against Ethereum than Ethereum is against HBAR. And so there's more room for HBAR to be outperforming Ethereum right now than for Ethereum to outperform HBAR. And so that doesn't necessarily mean that HBAR will have to start immediately outperforming, that HBAR will immediately have to start outperforming Ethereum, but it could. And there's a good amount of room for it to move up to the upside, and there's more room for it to move to the upside against Ethereum than there is room for it to bleed against Ethereum, is what this is suggesting at this current point in time. So again, none of this is financial advice. Make your own decisions. But that's one of the useful use cases of the UDPI, is it can tell us how an asset is performing against another asset, and then if it seems to be kind of overextended against that asset or kind of undervalued relative to that asset, and maybe likely to put in a decent move. Now, personally, I expect HBAR to do quite well in the kind of the second phase of this bull run that we seem to be in. That it does seem like the bull run is still very much on. That we're not about to go into some protracted bear market. And the other thing that's useful to keep in mind with these different assets is that the market cap of Ethereum is far, far, far larger than the market cap for HBAR. And what that means is that less money needs to get put into HBAR for it to put in, multiples, 5x, 10x, etc. A lot less money needs to go into HBAR for it to do that than into Ethereum. Ethereum being a multiple $100 billion asset needs a ton of money dumped into it for it to do a 5x. Whereas HBAR, sitting down in the single-digit billions, doesn't need nearly as much money to be injected into it before it can make some of those multiples. So that's another kind of fundamental aspect that you oftentimes need to keep in mind. Now again, that doesn't guarantee that HBAR will outperform Ethereum. Ethereum could just suck up a lot of the liquidity and really kind of outperform a lot of the layer ones theoretically. But it just means that there's less money for these smaller cap assets smaller market cap assets, less money needs to get put into them for them to run further. So that's another thing to keep in mind in the context of these risk indicators, is some of those kind of, if something goes on a run, how realistically how many multiples can it put in? And generally speaking, the larger the market cap, the less multiples it's really likely to be putting in, just because of how much money would have to get dumped into that asset. Alright, so if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we'll be regularly updating, both on the channel and on Twitter, the HBAR UDPIs as well as our UDPIs for a bunch of different assets. And just remember, with the UDPI, we're going to make it.